You've got a book coming out, Zillow Talk, Rewriting the Rules of Real Estate. How did the rules change?
They've changed a lot because of the growth of the internet. So buyers now have more information than ever before. It used to be that only the real estate agent had all this access to information and it was hidden in secret databases. Now home shoppers, buyers and sellers have all this incredible.
It's like buying a car. You can see what the prices are and do your own comp.
That's right. Information transparency is powerful, and that's what the internet has given to us.
So are you seeing more people doing sort of person-to-person deals as opposed to bringing in a broker or a real estate agent?
No, the percent of for sale by owner sales has stayed pretty constant, around 10 to 15% over a very long period of time. The difference, though, is that the consumer comes to the table much more educated. They still use an agent, and so the role of the agent has changed. Agents have to help the consumer interpret all the information they see on the internet. So they're not an information gatekeeper. They're a transactional consultant. They're an interpreter. So the agent is still very important, but they are playing a different role. You know, the internet has changed things in other ways too. So, for example, just when to list your home, which is something that we analyze in this book. The best time to list your home is in late March, the last 2 weeks of March. If you live in the southeast or the southwest, a warmer part of the country, it's a little bit earlier, kind of early to mid-March. If you live in the northeast where it's colder, you want to list your home in April. And it's because you want people to have already brought listings onto the market, but then you want your listing to look fresh. And you don't want to list too early because then it sits on market, and now home buyers on the internet can see how long listings have been on the market, and they start to think that there's something wrong with your home. It's sort of tainted if it's been out there for too long. So information transparency is good, but it also has important effects on housing market psychology.
Spencer, I just want to go back to a conversation you and I had earlier, and it was about the effects of crude on housing, but I want to talk about Dallas specifically. It's one of the hottest markets for Zillow, at least that's what you think for 2016. And I think some people would scratch their heads. Why would you be bullish Texan real estate with crude at $30? Can you explain that to me? Sure.
Well, the Dallas economy is actually doing very, very well. Now, what happens in these local climates is it depends greatly on the levels of negative equity, which affects inventory levels. And the levels of negative equity are impacted by how large the down payments were that people had on the homes going into the housing upswing and then the housing downturn. So in places with high rates of negative equity, there's low inventory because people can't list their home, and what little inventory there is tends to sell very quickly at a high rate. So a combination of a strong local job market in Dallas, high rates of negative equity, that's created a high rate of appreciation in places like Dallas, but also Arizona, for example, or Las Vegas. So places hit hard by the downturn have actually had big bounces, and I think that's one of the things that you're seeing there.
Just to develop some of the thinking there, Spencer, on the hangover from the financial crisis. Here in the UK, there's a big concern about those that took variable rate mortgages before the crisis and what will happen when rates go up. I'm just wondering, for the US, as far as you're concerned, if we had a washout, has there been enough of a correction in the housing market that we still don't have that hangover from the pre-crisis mortgages?
No, the washout has happened here. I mean, there is still some foreclosure hangover. You have still 10 to 15% negative equity, so a lot of people still are upside down on their loan, but nothing like where it was during the depths of the recession. So I would say the worst is definitely behind us. We have moved into this next stage of housing, which is boring. And boring is good for a housing economist or a housing geek. You want boring. 2.5% rate of appreciation, which is basically the long-term historical average before the big run-up and before the big crash. 2.5 was what we expected, and that's what Zillow forecasts this year.
But if I want more than 2.5, you say you can use the internet to find places that are hotter and neighborhood characteristics that will make my price appreciate faster. You've got an interesting aspect there, the Whole Foods effect.
Yeah, what we've done is looked at kind of what are leading indicators of neighborhoods happening. And in the hardcover version of the book out last year, we looked a lot at Starbucks and saw the impact of Starbucks. For the release of the softcover this week, we refreshed that to include Whole Foods and Trader Joe's. So the data says over a 17-year period, homes in America increased 70%. But if your home was near a Starbucks, it increased 100%. And if your home was near a Whole Foods or a Trader Joe's, it increased 140%. So twice as fast a rate of appreciation as the average home in America. So advice to buyers, buy near a Whole Foods, buy near a Trader Joe's, or failing that, buy near a Starbucks, and you'll do fine.
There, I wonder,
I like the Starbucks aspect of it, and having a Whole Foods nearby, not bad as well. Spencer Rascoff is with us. His book is Zillow Talk, Rewriting the Rules of Real Estate.